Indiabulls Housing Finance reported in-line set of earnings with net profit coming in at about 710 crore rupees. However, the loan book has shrunk about 29% on a year-on-year basis, and they remain strong in terms of the cash that they are holding because of the, conserving the cash exercise that they did in last couple of quarters. So Ashwini Hooda of Indiabulls Housing Finance is here with us to help us understand the second quarter earnings. Mr. Hooda, so while your profit was in line with the expectations, but in last 1 year your loan book has shrunk quite meaningfully, almost by 30%. I'm talking about the on-balance sheet loan book. And that's because of the liquidity crisis, whatever was happening in the NBFC space, and also because of your efforts towards getting a banking license. But now all that is behind us now, at least the banking license part. So going forward, what kind of disbursements rate would you be targeting? And can we see your loan book grow again to the levels that we saw earlier?
So again, we were in consolidation mode for last few quarters, and clearly the company has a plan to start growing its retail book in meaningful way in coming quarters. So what we are guiding the market is that we are targeting almost 40,000 crore of disbursement over next 12 months. It will be 100% retail-led growth, so we will do only home loan and LAP and no wholesale lending in that book. And this will be an asset-light model where 40% of it will be under co-origination, another 40% will be where we will securitize the portfolio, and the balance 20% which we be doing business in tier 3, tier 4 also after seasoning can be securitized. So we expect only around 20 to 30% of what we originate to stay on our balance sheet. That will allow us to grow without increasing the balance sheet size, because the company believes till such time there is stability in the financial markets in terms of liquidity, we would not want to grow our balance sheet size aggressively, but AUM will continue to grow as we focus on retail-led growth.
Okay. So how much did you securitize in the quarter gone by?
So we would have securitized around 2,500 crore. So we continue to focus on securitization. In last 12 months, if you look at, we have securitized more than 25,000 crore of portfolio. So there is a very healthy market, good appetite, especially from large banks for securitized assets, and we don't see any issue in that market.
Okay, so how did your margins and spreads pan out during the quarter? And if you could also tell us yields, I managed to catch in your con call yesterday about 11.9%. How were the cost of funds during the quarter gone by?
So the spread are at 3.05, which is in line with what our guided range is, 3 to 3.25%. They have come off a bit as wholesale book runs down, and that's the strategy of the company as well. However, a co-origination or securitization model allows us to give 20% plus ROE even in a lower spread situation. The cost of funds incrementally have been 9.05%, whereas on book basis it is 8.88. So they've come down actually from last quarter a bit, but the full interest rate reduction which has come through in the marketplace is yet to be transmitted.
So talking about the wholesale book, even though you are trying to completely run down that book, but as on date, how much is your wholesale book, and any watch list that you would want to guide us?
So again, our non-housing, including LAP, are around 35% of our loan book, and there is no specific watch list. We have been aggressive in making provisions. If you would have seen, our credit costs and floating provision through last few years have been high, which allows us to quickly provide for any slippages. So there is no watch list per se. These are all secured loan with adequate security. The cash flows for construction finance segment has been under stress for some time, but as the projects gets completed, and most of our projects are in near completion stage, the sales volumes pick up, and we're not seeing any widespread issue in the portfolio.
Sir, in terms of absolute amount, how much is your construction finance book?
So construction finance book would be around 10,000 crore.
Okay. Sir, last evening there were a couple of measures announced to revive the real estate sector for the low and mid-income housing segment. So do you stand to benefit out of that? What is your opinion on the same?
So the way it works on two levels. One, it allows us to get the project completed wherever these are last stage construction, so they can be completed, and the sale velocity in a project that is completed is much higher than a project which is midway or initial stage of construction. So that should help these projects to complete complete quickly. Two, it helps in helping us conserve the liquidity, so we can instead of spending money in getting our projects completed ourselves, if an outside fund can bring in that liquidity to get these projects completed, then the liquidity cushion that I have remains intact, and I'm able to channelize more funds towards my retail growth that I've charted just now. So I think it's a big positive from a company perspective, and from a real estate sentiment perspective also, it is a very good news that there are very large projects which are stuck where small amounts of monies are needed, and that will result in unlocking those funds for the customer. He gets the house, for the lenders they get back their monies. So I believe if it can be implemented quickly and the disbursements can start for the projects quickly, then it will be a big positive for Indian real estate market as a whole.
Okay. So now I want to talk about your fundraising plans that you've announced, 10,000 crore rupees NCDs and also NCDs along with warrants via QIP. So I want to understand that you have a lot of cash on your books at the moment. So why this fundraising proposition at the moment?
So we would be raising funds from banks and marketplace every day, because for our growth we need further funds. So these funds are intended to supplement, it is not only the liquidity buffer, but I need growth capital, and then they will help me to grow my retail book.
Okay, so if I got that correct, the current liquidity that you have, that is a buffer, and you want to raise funds basically to grow further from here on. Is that correct?
Absolutely. So if you look at last year our cash and this year cash, they've remained almost same. So 21,000 crore plus. And whatever fund raise then we do through securitization, through bank term loans or bonds, that is what we are investing in growth.
Okay, and so the second part to this fundraising question was that on one hand you have a buyback plan which is temporarily on hold, and on the other hand you're going in for this fundraising at an appropriate time. So how do you put these two things together? They're contrary basically.
No, so again, buyback is where investors want to exit, but because the shallow nature of our bond markets, there is no vibrant secondary market, and hence they are not able to get an exit. That is why we have been buying back the bonds, especially the near maturity term bonds. So that is for existing bond holders. and new issuance, most of we are planning would be equity linked, so there could be a substantial upside in case the company does well. So there should be a healthy appetite for those kind of instrument if there is no currently healthy appetite for bond in the current scenario. Indian bond markets have been very lackluster for especially non-banks in last few quarters. In first 6 months, hardly 15,000 crore of issuances have taken place. Indiabulls Housing alone had placed 21,000 crore plus bonds in financial year 18. So clearly there is no depth, and equity linkage will definitely create that interest among some participants who can get the upside of an equity.
Okay, so one last question. When it comes to your borrowing, how much is long term and how much is short term, and would there be any asset liability mismatch issues at the moment?
So we were the first one, 12 months back, where we had said that we have changed our ALM to ensure that we are perpetually matched, and we had published somewhere in October end last year a perpetually matched balance sheet. We continue to have a fully matched ALM for next 10 years. We are publishing every quarter. So there are no mismatches. The ALM continues to be a very strong point for the company.
So I would want to squeeze in one more question. So basically going back to the announcements with regards to the real estate sector yesterday, and you said that it's going to be a big positive for your company and for the sector as a whole. So for some of your projects in the construction finance space, would you be actively and proactively seeking help from this special fund, this special window that has been created?
So we would definitely want our projects also to get priority funding, as that helps in conserving liquidity at our end. Most of our project, in fact 90% of our construction finance project, qualify for this scheme. So we would definitely want to avail this liquidity window. We hope that it is quickly administered, as it is not about just specific non-banks accessing this window for their own projects. It is for the real estate market as a whole, which is actually much more important and much larger from a sentiment perspective, and the whole issue of a lot of small and mid buyers getting remaining stuck with some of these projects. So I think the larger positivity that this initiative will bring is way more important. But to answer your question, yes, I mean, we would want to conserve our liquidity and put it for retail growth, and have government AIF fund to help complete some of our projects.
All right, Mr. Hooda, thank you so much for joining us. And that's Indiabulls Housing Finance trying to get back to the normalized growth rates from here on, and they have the fundraising plan as well, basically wanting it for the growth prospects from here on.